ETFs, or exchange-traded funds as they are called, are popular and much promoted passive investments today, as they are suitable for a buy and hold investment strategy. According to Statista, there have been close to 6,500 ETFs in 2018 available in the market worldwide. Morningstar has estimated the monies invested in ETFs close to $5 trillion worldwide. These are vast numbers, and the choice can be quite confusing. To make things easier for you, I am explaining in this video the different categories of ETFs you can choose from for your portfolio diversification. Please join me for this 15-minute video. Hello, my name is Monika Sturm. I'm a women's finance coach. My mission is to help you to become a confident and independent investor to reach financial freedom and security. In my webinars, I share with you knowledge on how to manage your personal finances. I also give you insight into the financial markets and products from an independent investor perspective. My goal is to explain investing in an understandable and unbiased way to novice investors and to help you to gain confidence in investing. Which categories of ETFs can I choose from? This is our topic today. ETFs are investment funds traded at the stock exchange that replicate a basket of securities called index. But why are they so popular today? As the classic savings accounts and fixed deposit yield close to zero, people are now looking for alternatives which can help them to grow their savings above inflation rate. ETFs are fairly easy to invest in. With one purchase, you can invest into a basket of securities. They are traded daily at the stock exchange, are relatively low in fees, and offer better diversification than a single stock. This is why they have become very popular since their introduction 25 years ago. Together with mutual funds, they are the investment vehicle of choice for novice investors or those who cannot afford to spend much time on money management. ETFs track a particular index, which represents a particular market. But which criteria to look at when choosing an ETF? In my webinar, ETF or mutual fund, which one is right for you? I have already explained ETFs and risks and opportunities in more detail. I've already covered physical and synthetic ETFs. If you have not watched this video yet and would like to see it, please find the link below. As always, please remember, and this is important, all financial products mentioned in this webinar are for illustration purpose only and do not express a recommendation to buy or to sell. Investment decisions must always consider the individual personal financial situation. Today I will go more into detail on what types of ETFs are available in the market according to categories. Here you can see some of the most common categories. Geography ETFs give you the possibility to invest into a particular country, region or continent. Let's say you would like to invest into the stock market in the US, but you do not want to invest into single shares. You could pick an ETF on the S&P 500, for instance. This index covers 80% of America's most valuable companies. It's made up by companies like Apple, Microsoft, Amazon, Facebook, Alphabet, Johnson & Johnson, Procter & Gamble, and many more US brands. There are also ETFs that cover entire regions, like ETFs on the index MSCI Asia or MSCI Far East. The wider the geographical region, the more diversification you get and the less country risk you take. Very often investors like to invest into countries they are living in because they are most familiar with it. But they overlook risk concentration. If the economy is not doing well in that particular country, the leading country index will not perform well. So it is better to diversify into more countries unless you absolutely know what you are doing. To illustrate my point, let's look at this chart here. Both graphs shown here represent ETFs on an MSCI index. The blue graph is an ETF that tracks stocks in various industry sectors of the Pacific region and holds Singapore shares as third largest position after Australian and Hong Kong stocks. Whereas the red graph shows an ETF on the MSCI Singapore index, which tracks Singapore shares only. The ETF holds stocks of Singapore companies, mainly in the finance and real estate sector. As those two industry sectors were having a bit of a hard time this and last year, the performance of the index and hence the ETF is less good than the Pacific ETF, which is much broader, diversified in terms of industries and countries in the Pacific. So more diversification often makes sense as you can reduce risk concentration. In addition, you often find certain industry sectors dominating the economy in one country, particularly if a country is heavily relying on a few industry sectors. If these sectors are adversely affected, the ETF and the index performance are affected as the dominating industries have a heavy weight in the index. The index which can give you the broadest country diversification is the MSCI World. It does not cover all countries of the world as the name might suggest, but it mainly covers the major stock markets like the US with about 67%, Japan with about 80%, and then UK, France, Switzerland, and it covers 11 industry sectors. So it's rather broadly diversified. You could say with an ETF on this index, you cover the largest companies in the world's major stock markets. This index produced an average return of 5.2% per annum over 20 years. Or in other words, with an investment in this index over the last 20 years, you could have doubled your money in about 14 years. ETFs can also be selected according to industry segments. Here in this slide I have listed the most prominent ones for you. If you would like to invest in a particular sector that you believe will develop well in future, you can invest into an ETF that holds securities in that particular sector. For example, you believe the healthcare sector will develop well in future as it is a stable and essential to life industry segment. You can choose from a wide range of healthcare indices and ETF issuers. Let me show you an example from this sector. Here you see 3 ETFs tracking 3 prominent indices of the healthcare sector, but covering different regions: the US, Europe and worldwide. The ETF on the US S&P 500 healthcare in blue shows the best performance over 5 years. it composes of America's most valuable healthcare companies. The ETF depicted by the orange graph shows the performance of the MSCI World Healthcare ETF, invested in 156 shares of large and medium capitalized companies from industrialized nations. 166% of the companies it's invested in are US companies. The rest comes from other industrialized nations. The red graph depicting the ETF on the Stoxx Europe 600 Healthcare is invested in Europe's most valuable healthcare companies, such as Novartis, Roche, AstraZeneca, Bayer, and many more. It covers 18 different countries, but 36% of the ETF are companies from Switzerland. These ETFs differ in performance, geographical coverage, fund size, fees charged, volatility, and risk-return profile. But they all physically replicate and do not engage swaps. The Euro Stoxx Healthcare distributes dividend, which is not included in the performance of the ETF shown in this chart. All these aspects you want to take into consideration when making a choice for an investment. In a similar manner, you can also choose from a list of themes you want to invest in. Such themes could be aging population, cybersecurity, digitalization, Islamic investment, or mid-caps. Mid-caps are medium-sized companies, and many more themes. An aging population ETF would most likely cover sectors that are typically needed by an elderly population, such as therapeutical services, retirement homes, clinics, hygiene products, etc. Digitalization would include logistic companies and online platforms. Just remember, the more narrow your diversification, the more risk you might encounter because you are betting on a limited number of horses. The more you spread your diversification, the more horses you have in the race. However, if you have deep knowledge about a particular industry or a theme, maybe because you're working in that industry, you could risk a more focused approach with a share of your portfolio. Lastly, you can choose ETFs and their underlying indices by asset class. Here we have ETFs on this chart that invest in shares or various forms of bonds, such as government bonds, corporate bonds, or more risky emerging market bonds. There are also ETFs on inflation-linked bonds. For such a bond, the principal is indexed to inflation. That means they are designed to hedge the inflation risk of a bond, or in other words, your investment will be adjusted by the inflation rate of the investment period, so you do not lose purchasing power, so typical for bond investments. There are also ETFs on commodities, which are usually called ETCs or exchange-traded commodities. They offer exposure to commodities like precious metals, energy, or even water. If you plan to invest in precious metals, there are ETFs available that track the gold, silver, or platinum price. Money market ETFs are another asset class. They generally invest into short-term debt instruments such as treasury bonds. Since interest rate is currently very low, these ETFs provide mostly a return below inflation and are currently less attractive. Last but not least, there are ETFs on a very popular asset class, real estate. Here the ETFs invest mainly into real estate companies or REITs. REITs are real estate investment trusts which are companies that own and in most cases operate income-producing real estate. This could be office buildings, shopping centers, warehouses, apartment or commercial buildings, or even hospitals. REITs often pay a handsome dividend. Spreading your investments into different geographies, industries and asset classes will bring diversification and reduce volatility in your portfolio over time. However, too much spreading of investments can reduce your return on your portfolio. But this is another topic for another time. I have come to the end of my presentation. I hope you liked my overview on different ETF categories, and it will help you on your path to financial freedom and security. As always, I would love to hear from you. Your feedback would help me to produce relevant webinars for you. If you have any questions, please leave them in the comments below or send me an email. If you would like to learn more about how you can grow your savings and my long-term personal experiences in the financial markets can help you, please sign up for more webinars on my website. You find the link below as well. Please also take the time to read the disclaimer here. Thank you for watching. Your Women's Finance Coach, Monika Sturm.